Have you been freaking out about the recent slump in Bitcoin's price? Well, buckle up because we're going to dive deep into what's going on and what it might mean for the future of everyone's favorite digital asset. Today, we're diving into some of the most intriguing Bitcoin news that could signal a major shift in the market. Retail demand is at a 5-month low, but could this actually be a precursor to a rally? And how low can Bitcoin's price really go? Plus, we'll explore the new June lows and what they mean for the $35 billion in open interest. First up, let's talk about the average retail demand for Bitcoin hitting a 5-month low. You might think this is bad news, but it could actually be setting the stage for a massive rally. According to recent reports, Bitcoin's average retail demand has fallen to its lowest point in 5 months. This decline in retail interest might seem concerning at first glance. However, historically, low retail demand has often preceded significant price rallies. Why? Well, when the retail investors step back, it often indicates a cooling off period where smart money like institutional investors steps in to accumulate Bitcoin at lower prices. This accumulative phase can set the stage for a substantial price surge as demand eventually picks back up. Could we be on the cusp of such a rally? But wait, before we get too optimistic, let's consider the flip side. Just how low can Bitcoin's price go from here? This is a crucial question for anyone invested in or considering investing in Bitcoin. Analysts have been debating the potential floor for Bitcoin's current downtrend. Some experts suggest that we could see Bitcoin drop as low as $50,000 or even $45,000. These predictions are based on various technical indicators and market conditions. Key factors include the current macroeconomic environment, regulatory pressures, and overall market sentiment. While a drop to these levels might sound alarming, it's important to remember that Bitcoin has faced and recovered from significant drops in the past. The key is to stay informed and prepared for potential volatility. Now, let's dive into the latest development. Bitcoin hitting new lows in June and what this means for the $35 billion in open interest. Could this be a game changer for the market? Recently, Bitcoin's price hit new lows in June, causing a stir in the market. This decline has had a significant impact on the open interest in Bitcoin's futures, which currently stands at around $35 billion. Open interest refers to the total number of outstanding derivative contracts that have not been settled. High open interest during price drops can indicate that traders are heavily betting on future price movements. This situation often leads to increased volatility as positions get liquidated when certain price levels are breached. However, it can also create opportunities for a swift price recovery if the market sentiment shifts. The current scenario could be setting the stage for a potential rebound as traders adjust their positions and new players enter the market. So with all these factors at play, what's the bullish case for Bitcoin? Could we really see a significant rally in the near future? Let's explore the potential catalysts that could drive Bitcoin's price upwards. Several factors could contribute to a bullish turnaround for Bitcoin. First, institutional interest remains very strong. Major financial institutions and corporations continue to show interest in Bitcoin, viewing it as a hedge against inflation and economic uncertainty. Second, we've got technological advancements and upgrades to the Bitcoin network, which could enhance its scalability and usability, attracting more users and investors. Third up, positive regulatory developments, such as clearer guidance and supportive policies could boost investor confidence. And lastly, the broader adoption of Bitcoin as a payment method and store of value could drive sustained demand. All these factors combined create a compelling bullish case for Bitcoin's future. Let's jump down to the charts and I'll share my short to medium term Bitcoin price predictions. Okay, guys, here we have a Bitcoin paired up with USDT. We're on the 1-day Binance chart. And as you can see, we did get rejected from our expected range. This was between the $69,709 to $72,167. We obviously had our swing high on the 7th of June, coming in at 71,997. This was also the Y wave high that we were tracking. We did obviously talk about the idea of potentially having a breakout. We did actually have a little mini breakout here with our most recent swing high on the 7th of June being higher than the one that we saw on the 21st of May. This meant that we were not tracking a larger kind of three-wave move coming down like this. However, we're tracking a totally different structure, which we can see playing out quite nicely right now. You can see here we're still getting support on the yellow line. That is the 50 simple day moving average, and the blue line, the 50 exponential moving average on the daily time frame, right? We've had no closed positions lower than these, and that gives us a little bit of confidence. You can see that today's candle is a dojo, basically indicating that the market doesn't really know which way to go. Today is a key day. We have FOMC, we have all these kind of things going off over in the US that is going to create huge amounts of volatility later in the day. So we want to be very aware that the market's quite indecisive over how this is going to go. I think we've seen a lot of things being priced in the market, specifically as we talk about the idea of a Federal Reserve interest rate cut, like we saw with the European Central Bank. And basically what we're doing here is seeing and waiting to see whether or not the Fed do in fact pause, which is what my expectation is going to be. If there is a pivot, I think that's being priced in to a degree, but we'll still see volatility on it. And should the market or should the interest rate remain the same, no change, then I expect a rebound to the upside, right? So knowing that today is going to be a key day, TA in itself shows us with kind of the idea that potentially moving down just a little bit deeper. I'm going to show you why I think this. If we have measurements here from our initial kind of drop to the rebound that we saw here on the 10th of June, that high being 70,195. This shows us with the idea that we still have a little bit more room to the downside, but there is some confidence to be seen here because we obviously have landed right inside our expected range, which is right inside here, this little yellow box, which is the 1 to the 1.236 fib scales, right? Basically 65,924 to 66,722. Okay, so for the most part, we don't have to go down any deeper than we've already come here. And this can be a three-wave correction that has completed, right? So there's no need for us to continue this move to the downside. But should the market continue to experience volatility and some negativity around what the Fed do over in the US, then we might in fact come down in a slightly different structure. But for now, the expectation is that we don't have to. Okay, it's still possible, technically speaking, but it shouldn't be something that we should just be expecting as a given. Unlike many of the other patterns that we talk about, where we say that they have a highest probability of an outcome being downward price pressure, which we kind of saw from this higher range here. We didn't really see any need to continue moving upwards, and we only saw rejection from these areas. So with us coming down to our expected range, right inside our kind of third wave expected 1 to the 1.236 fib scales, we found support on the 50 simple day moving average, the 50-day EMA. We don't have to come down deeper. Expect the wicks to kind of come down, liquidate a few longs before actually going potentially up higher. It'll be interesting to kind of see how that plays out, but there's no reason to think that we're going to lose that 50-day simple moving average at the point of recording today's video. Obviously, all cards are off the table on FOMC. This is pure gambling territory today, really. As indicated with that dojo candle right there, basically the market just cannot decide as to which way the market should be going, okay? So price should be going. So there's basically a lot of people gambling on the market here, and so we want to be really cautious. We want confirmation. If we do see a pause, I expect confidence to come back in the market, sentiment to be bullish, and for price to rally upwards. Everything that we had seen so far is basically pricing in the idea that maybe we do have a Federal Reserve pivot, which is, I think, unlikely to happen, but it is something that is very much required. So we are going to be expecting that in the coming months. If it isn't June, I think there's going to be a really high probability that it will be July. So keep a close eye on all of that. As obviously we've been talking about for quite some time, a Fed pivot. We're talking about Q3. Here we are. I don't think it's going to be as early as June. I expect it to kind of be pushed off a little bit further, but you never know. So we'll keep a close eye on everything that is going on with the Fed. Now, as we kind of bring up our stochastic RSIs, our momentum-based indicators, it still shows us with some more downward pressure here. So I expect some volatility today into tomorrow, and we'll probably look for this to cross the yellow line being the stochastic RSI, the white line being the smoothing of K, or the average of the stochastic. We will be looking for those to cross. A bullish cross on those will be what we're looking for on the daily time frame. We're overbought on the overbought on the hourly, and so we are going to be expecting more volatility to the downside on the smaller time frames, whereas I expect the bigger macro movements to be something that we see over the next week or so, actually rallying back up higher rather than continuing to crash on down. Now, if we take the stochastics off, throw on the relative strength index, you can see there was bearish divergence on the 5th of June. We can see obviously coming down here just lower than the 50 level, still plenty of momentum available to the RSI, and yeah, there isn't terribly too much to kind of give us too much confidence right now for reversals when it comes to the relative strength index. If we take a look at the volume profiles, and as I was talking about earlier, we can see, of course, how the volumes are quite interesting. That we see ultimately price rallied up here as volume dropped down, and we can see as we had the correction to the downside here, volumes haven't really spiked up in any major way. Most recently though, yesterday we did see a lot more selling pressure, so volume did increase on this move to the downside. That's not giving us confidence on the smaller time frame stuff, but on the macro scale I'm not terribly too concerned over what we are seeing. Now, if I throw on smart money concepts, we can also see here that we're still in a bullish pattern. We've got a couple of moments of volatility on the smaller time frames with change of characters, break of structures, those kind of things. But for the most part, I'm not terribly too concerned over the things that I'm seeing here. Obviously, our 200-day EMA, our exponential moving average, our trend filter is sat at $57,000. So should we see extreme volatility for whatever reason, our 200 EMA is our support level, as I was indicating with some people predicting out $50,000 to $45,000. That would basically mean that we'd have to lose the support area of the 200-day exponential moving average, which would be a major problem for BTC in the longer term, in my humble opinion. At the moment, we still remain in a bullish trend as per the trend filter of the 200 EMA. And of course, smart money concepts also shows us on a macro scale still in an upward trend move. So everything that's going on at the moment, as we can see over the overlapping candlestick patterns, everything that's going on from pretty much from March 2024 to where we are today, it has basically been an indication of a ranging market. Nothing else has really gone on here. Basically, lots of liquidations and lots of liquidity being grabbed and extracted from the market by basically just bouncing from the highs to the lows within that range. So we remain actually pretty confident in the long term for Bitcoin. I don't think the bull market is over. I do think we are going to see some volatility. We are, of course, expecting a Federal Reserve pivot, and once we do see that pivot, we'll expect a much bigger crash in the market where we might start to actually come into those $50,000 to $45,000 ranges to create max pain in the market ahead of what happens next. A Federal Reserve pivot, though, is an incredibly bullish thing, but it does have, historically speaking, negative impact on the stock market and, of course, the crypto market, which is obviously tethered to that to a degree. More so for Bitcoin now than anything in the past. Now, a Federal Reserve pivot, lowering of the interest rates, would be incredibly positive for the market, but normally it only happens when the market is at its weakest, when liquidity is at its weakest, and ultimately when retail investors actually require more funds. Obviously, inflation in high interest rates usually mean that they're bleeding out money. Retail investors bleed out money, and they generally need to liquidate their assets to be able to survive, to keep the roof above their houses and all that kind of roof above their heads and so forth, right? Keep their houses, pay their mortgages, pay their bills, feed the families, these kind of things. So usually Fed pivot happens when that liquidity is dried up to the point where no one can really afford to buy any assets, and instead they sell. So although a Federal Reserve pivot is incredibly bullish because it shows a reduction of interest rates and it shows that risk on assets are more appetizing to institutional level investors, they typically see a downward move in the stock market, a downward move in the crypto market, and then that supply gets soaked up very, very, very quickly, usually by larger institutional players and whales who are prepared with lots of dry powder on the side. Okay, so knowing that a Fed pivot is bullish, it does obviously have that negative price action for probably a very short period of time of around 4 or so weeks before we start to really see a significant rally. Anyone who has TradingView can go back and take a look at the interest rates and see when they were cut, and obviously putting the correlation Bitcoin or the stock market, and you'll see a pretty healthy correction of around 50% in the stock market every time the Federal Reserve have cut their interest rates. More interestingly about that, though, is we actually see that the market in itself tends to like a static interest rate. Whether the rate goes up or goes down, typically that is when you see the volatility in the market in terms of negative price action. So all in all, I think it's a key day today. We'll see how it goes. I'm not expecting terribly too much from the Fed, but if they decide that they do want to cut, then we are going to see a lot more downward price pressure, in my humble opinion. You can let me know all your thoughts and opinions in the comments down below. Smash that like button if you've enjoyed today's video. If you're new, subscribe. And if you haven't checked out this video here, check it out, guys, and stay well informed in what's going on in the crypto space.